I'm Peter Resnick from ShadowTrader.net, and this is the weekend edition. Yet another bullish week as we kicked off the start of the week with a large gap up higher, and that gap only filled by a little bit, leaving a huge space on our charts. We've got to carry forward that gap, of course, and from there we just sort of chugged higher into Friday, which was an options expiry. On a short-term basis, we're probably a little bit overbought, and I'm just going to show you a simple trick you can use in terms of extension over the 8 EMA. That generally brings prices a bit lower, even if it's just a little bit temporary. Beyond that, I'm also going to do a little bit of a deep dive on gold and the dollar right now, because gold has been selling off a bit over the last number of days and is coming now into trendline support around 3,100, which I think is going to be very key. And if you look back on the charts and kind of A/B them, you'll see that it's kind of trading lockstep in terms of what's happening with the dollar. So that's also going to be quite interesting. A few other nuances as well that I want to point to in the show. So all that and plenty more. Less talk, more charts. Let's go. As always, before we look forward, we just look back for a little bit. We do a little thing called the weekend review when we start our program, looking at the 11 sectors of the S&P, see if we can see any anomalies there that may help us in our trading next week, and also taking a brief tour through gold, Bitcoin rates, and the dollar and things like that. And so obviously, as I was saying in the intro, you had a kind of bullish week in the majors, up another 2.5 to 3%. Russell seems to be lagging here. I think the Russell is honestly waiting for a bigger sign that rates are going to be cut. And as we know, the Fed keeps pushing that out. So Russell is obviously continuing to lag. But technology was the clear winner here. And everything else up not as much, except for energy. Energy was really strong. But remember, energy is not a big part of the S&P. The one thing that I'm noticing here out of the sectors for me is basically right here is healthcare. Notice that in a very bullish week, healthcare barely budged, and that was because of the news of UNH. UNH is charged with some potential fraud and took the stock down huge. I mean, it's been cut, I think, more than in half now from where it started up at 650, and now it's just so much lower. So UNH had a very, very bad week, and that definitely added to the weakness here in healthcare, and that's why you're seeing that relative weakness. So you may want to watch this for a turnaround story. UNH kind of had a short covering rally into the close today on Friday. If that continues, maybe it lifts the sector, but we will see. All right, staples continue to be down, and I think that's kind of like a bullish sign, basically, right? We saw staples kind of outperforming when people are a bit more nervous. Staples continue to be down. That also could be a reversal play. If we come closer to a top in the market, we may see that move up a bit. Bonds were kind of flat. I still think it's just completely junk. You got to stay away from it. I do believe it's going lower. When you look at the TLT chart, there's that 85 support in TLT that has been tested, I think, 3 times already. And it's just kind of circling the toilet bowl down there and probably moving a bit lower. Yields down just a tiny bit. I got a little extra percentage there I need to get rid of. Sorry about that. VIX continues to collapse. Now we're in the teens. No big surprise, because obviously the market has just been moving straight in one direction to the upside, so that volatility overall in the S&P, call it that fear premium, is collapsing out of options. Gold was down about another 2.5% this week. That's something we're going to be talking about later in the program. As I was saying, oil up a little bit, and Bitcoin was about flat. Bitcoin is in, by the way, a pretty tight consolidation, looking to make that next move up to that all-time high, which should be interesting. We've been selling some puts in MSTR in the weekly options room last couple of weeks, and we're probably going to continue to do that because that stock has incredible implied volatility, and there's tons of premium up and down the chain. So usually what we do is we'll be short naked puts in the stock at different levels at supports that are quite far away, and then we're doing complex spreads on the upside, such as 1/2 ratios, 1/3 ratios, or unbalanced butterflies, taking advantage of that super high implied volatility. All right. But that is the weekend review, and now let's look a bit forward and get into the charts of the S&P and the NASDAQ 100 and see what's really going on. Okay, let's get into what's really going on with the charts. Before I begin with my analysis of the broad market in a couple of different time frames, I just wanted to make sure everybody knows that the ratings agency Moody's just cut U.S. debt right here at 4:45 p.m. Eastern on this Friday. And you can see how the futures reacted. And I don't know if they would be lower right now, but the market is closed. The futures don't trade as long on Fridays. Usually we get this like almost 24-hour activity during the rest of the week. But on Friday, we won't know now until Sunday at 6 p.m. So you're going to be probably watching this video before then, and watch closely to see what happens with the futures when we open, because we did have a debt downgrade. This is kind of a big deal. If you recall, Fitch's, another rating agency, downgraded U.S. debt, I think about a year ago. And now Moody's did it one step lower as well. So this could impact gold, it could impact the dollar, could impact rates. Monday should be very, very interesting, as all this happened after the equity market is closed, bond market is closed, etc. So it could be very, very interesting to see what's going on. So I just wanted to kind of start with that information, because obviously what I'm about to show you in the charts, I can only tell you how we close Friday. I don't know what's going to happen Sunday night. I don't know what's going to happen Monday morning, but for now it is quite bullish. So let's get into that. I'm going to start off here on a very long time frame. I want to go with the monthly to start. If you recall, back when the month started, I put out a video saying, you know, these bears are kind of screwed because of this big body candle. It's just very, very hard to retrace that sort of big shadow. When you see these big shadows on the long time frames, they tend to hold, right? And this was probably one of the largest that we've seen. It could be like the largest shadow, honestly, in history, in the history of the S&P, percentage-wise. I can't say that for sure, but go back and check it. It may very well be. And what I think is noteworthy as well is, and this is why I'm starting with this monthly chart, is that the activity now has taken back the entire body of the month of March. And I think that's kind of noteworthy, because this is kind of really where the tariff stuff started, and people started to get nervous, and equities, you can see, started to sell off right from there. And usually I'm a big believer, when you retrace 100%, you're probably going higher. Usually when you hit that 100%, you get a little bit of backing off and you kind of keep going. And I purposely put this channel line up here to show you where I think the market could go. The all-time high in the market is here at 6147.43. We're not that far away if you look at it. I mean, the market's closed at 59.58, and this is a monthly chart, so it could easily still happen in this month. And if you look at a weekly, right, this is this week's, and is it that much of a stretch to say that this weekly bar could be duplicated here, about the same size, and you're there? Not really. I mean, you literally could be back to the high, which would be 100% retracement of the move. And then we have to kind of reassess the situation from there. I mean, do we chug higher? Do we get some sort of an inverted head and shoulders like this and then chug higher? I don't know. More than likely, there will be some pullback from that area, especially if we continue on this trajectory and go there without pausing, right? I call that coming up from the bottom. You can say that you kind of started here, or you started here from the gap of earlier this week. We're going to talk about that in a second. But anytime you have that coming up from the bottom, usually you get a pause when you get to the breakout point. I always like to tell my subscribers, it's not a good idea to be a buyer at a breakout point when you've already traveled a long way to get there. What you want to be doing is being a buyer at a breakout point that has sideways consolidation or hits the breakout point and pulls back, and then you can be a buyer on the retest. You can call that like point number 2, but generally it doesn't make sense to do so if you just go in a straight line. So this essentially is the technical picture here in the S&P. On the weekly chart, we might actually get a pinch of the 821. That would be kind of a bullish signal. Obviously on the daily chart, we got that a while ago. There is some congestion here that I think is going to be interesting to see how the market acts. We're now in this kind of congested area on the S&P coming up to it. And again, that's on the weekly, which really I think shows it clearly. As I said earlier in the show, if we go down to a daily, this all kicked off with a very large gap on Monday, and that needs to be carried forward in our narrative as essentially an unfilled gap. Short term, I always like to tell people that unfilled gaps are bullish, because it's a classic example of when what should happen doesn't. Gaps should fill. We really shouldn't leave these spaces on the chart. The market doesn't like them. And in this case, we did. We left that big space on the chart and just kept going. So carry it forward in your narrative. It could easily be a situation where it stays unfilled. If we have some sort of a big downdraft, then you want to be using that gap fill as a target. Basically, you want to be looking at the bottom end of that gap as a target. Now, also looking at this in a relatively short-term basis while we're staying on the daily, I want to point out that even though it's very, very bullish, you are now in a situation because of the lack of pullback. You can really think of this rally as starting here when it pulled back to the 8. Perfect touch of the 8 EMA and then moved a bit higher. And since then, we haven't come down a bit. There was a little bit of congestion here where we paused a little, kind of allowing that 8 to catch up. But the distance now between where we are and the 8 EMA is getting pretty high. Notice that the 8 EMA is here at 58.28 and we're at 58.58. So that's 130 points. That's a little bit overextended on the cash market from the 8. When you get that high, you can kind of go back, if you like, and measure some of these distances where we've come down before, and you'll see that it's very similar, maybe even less so, right? But whenever you get too far above that 8, like this is a good example right here, usually you get a little bit of a pullback to that 8. So that certainly could happen. So be aware of that. In the short term, I was saying this to my subscribers in my weekly room on Friday, basically, was saying that I didn't feel comfortable really putting on new positions on the long side. We're short some puts. We definitely have some long delta exposure, but not heavily. I just feel like, you know, we've kind of gone too far in 1 week. There was no pause. So to me, that's just how it seems. I like to always err on the side of caution. Just kind of makes more sense to me. That keeps me out of a lot of trouble. As always, I always like to give the caveat. Could the market keep chugging higher? Certainly. But remember, this is a game of odds. You always want to play odds, and you don't want to fall into that trap ever of this time it's different. Like let's say you got really longed up on Friday. Whatever your edge is, whatever your signal is, for whatever reason you got very longed up today in the late afternoon. And maybe you're listening to this commentary and maybe that's giving you some pause, but you're kind of playing that this time it's different card. That's the card that usually gets you in trouble. That's really dangerous, I think, to say that, because usually it's not different. Usually when you get a little bit overextended from the 8, you're going to pull in a little. So I'm kind of taking the foot off the gas a little bit as we head into early next week. And I'm also very interested to see now what happens with this debt downgrade. Should be interesting. I mean, obviously futures market is closed, but again, does the market completely just brush this off or not? I would think gold futures should be higher. Anything that is kind of a bulwark, so to speak, against that uncertainty. We'll see how Bitcoin trades, et cetera, et cetera. All right, let's take a quick look at the NASDAQ 100. This is also quite overextended, and I think the overextension from the 8 is even a little bit bigger here in terms of percentage. Obviously, in numbers, it's going to be bigger because the NASDAQ is a bigger index in terms of its, you know, what its value is. This is 21,427 to 874. So, I mean, well over 500 points, right? I mean, this is 120 plus added onto that. So you got about 550 there. Roughly, and that's a little bit overextended. You can see, you can measure what is it here, what is it here. You know, whenever you get that high above the 8, it just basically happens always. You get the pullback basically to the 8. So keep that in mind again. And of course, that same congestion area we talked about in the S&P is there as well. So I would expect that the market probably has a little back and forth. We'll see. In the NASDAQ, right? But not very different pattern-wise, I think, from the S&P. The unfilled gap is there. And again, my focus is on that. Carry that forward in your narrative. And my focus is also on the overextension currently from the 8 EMA on the dailies, which I think could cause a little bit of a pullback here in the near future. Okay, on to our number 1 draft pick, and this week I'm going to be talking about gold as a potential opportunity because we've come down to a support level, and here's where things could get interesting. Will it rebound back up from here? Will we move lower? We shall see. We're going to take a look at the dollar as well because there's definitely some very interesting correlation with it. So I'm kind of still thinking dollar more down over time and gold higher. But let's start with the gold chart if we could. We're on the daily. And there's a little bit of a difference between the continuous and the current contract. The current contract is GC M25. The continuous actually came right down to it, to the penny. And that's the trend line from here, from the early 2025 lows. And that's pretty interesting. Today was a relatively bearish day in gold. But overall, for now at least, this trend line is holding. So my MO over the next couple of sessions is to basically watch and say, okay, I believe this level is secure here, and I'm going to be watching to see what happens in here. Ideally, we would kind of flatten out, not test the trend line again, and move higher from here. If we retest that trend line again, then it's potential to go to the next support level, which would be this one. And this one, I will tell you, is stronger than the one we're talking about here at just over 3,100. Why is it stronger? One, because it's horizontal. General rule of thumb in technical analysis is that horizontal support or resistance is more powerful than diagonal. And then secondly, it is also more powerful because it ties in with a prior high. We know that this was an area where gold had a lot of difficulty breaking out from, then it broke out, and notice what it did here. It made a perfect retest of that area. So this is actually quite a strong support. I'm going to be looking at short puts like I usually am. I've been rinse repeating that trade pretty much all year, and it's been working very, very well, pretty much with a 100% success rate thus far, knock on wood. But I'm going to be watching that same trade early next week. Same thing, picking my spots carefully. I'm usually short puts under the support level. I don't know if there's any premium down here. I usually only like to go 1 to 2 days out. There's probably premium there at the 3,000, but you're going to probably have to take on 3 to 4 days of risk, and that's not really a good thing. You want to take advantage of the fact that gold futures options have 5 expiries every single week, every single day. So because you have that at your disposal, you want to take advantage of it, and thus you do not want to put yourself at risk going further out than, let's say, 2 days max. So kind of keep that in mind. Now, as I was alluding to earlier, how is this trading with the dollar? Before I get into that chart, I want everybody to notice that if you mouse over this right here, which was the short-term peak in gold here, it was on April 22nd of this year. That was the gold high. Gold has not been able to best that all-time high since then, correct? Now, look at this chart. This is interesting. If you look at the DXY, which is the dollar, right? Look at where this low is. This is April 22nd. It's actually, this is April 21. This is actually the 22nd. So it's literally the same time. Right when the dollar bottomed, that was when we had the top in gold. Now, the question is the dollar going to turn back around? I think that it does, to be honest with you. I think that this is essentially a pretty weak bounce for now. It has slightly broken the uptrend, but in a not very definitive manner. Notice that when it broke the uptrend here, it then immediately fell back down on the uptrend, and now it's having trouble kind of resolving. It's really having difficulty moving to the upside. So a good signal in gold would obviously be a dollar moving below this line. Right in here, that would be a great signal for gold if you see dollar there. That should give you some more confidence to be long those gold futures or GLD or whatever. So back to what I said in the beginning of the program. Also, don't forget about that Moody's debt downgrade. I do think that's going to have some effect on the dollar. It's going to have some effect on gold. I'm very interested to see how gold futures trade, how the dollar looks around then. But from a bigger technical picture, as I was saying, it does feel to me like this is so far just kind of a dead cat bounce in the dollar. We'll see how it goes. We'll see if it breaks trend. And if so, probably more upside in gold soon. Okay, and looking ahead into next week, things are quieting down a lot on the earnings front. Obviously, you can see from the graphic I put together here, not too many big names. As always, remember, this is not a comprehensive earnings list. Only the stuff I like, stuff that I think is market moving and tradable. But Monday is going to be a quiet day. There's no economic data nor earnings releases. But Tuesday is going to bring Home Depot, which is sometimes a bellwether for the economy, which is important. In the tech space, PANW is Palo Alto Networks. Then on Wednesday, 2 more bellwethers, I think, for the economy, 2 big ones. Lowe's, obviously the counterpart to Home Depot, but also Target. Target's important. Remember, Target, if you look at the charts, has really just been beaten down quite a bit for a while. So we'll see if this earnings report can kind of kick them, give them a breath of fresh air, so to speak. See if Target can lift a little bit. Baidu.com as well is reporting on Wednesday. Thursday is the usual employment data. That's a weekly thing, always initial claims and continuing claims. And Friday is going to bring new home sales into the mix. So relatively quiet week on the looking ahead. Not too much on the economic front. And as I was saying, the earnings are now starting to wind down. So you're obviously seeing less and less of that as well. And that is your looking ahead for next week. And that's my show for this week. Thank you so much for spending a little bit of your weekend with me. So let's recap what we talked about in today's program. Market is definitely bullish here. I started off specifically with those monthly charts and weekly charts of the S&P showing how we've retaken the entire March decline now, but also on a weekly chart, it looks like we're kind of 1 week away from coming back to the all-time high. Now, that being said, coming down to the daily chart on a more granular level, it does seem to me like we're a little bit overextended. I think we're due for a little bit of a pullback. Doesn't mean it has to happen, but historically, when the 8-period moving average is that far behind and you've only moved in one direction for quite a bit of time, as we saw this week, which was 5 days straight, usually a pullback is coming. All right, we talked a little bit about gold and the dollar. Think of this pullback, which came right down to that trend line low on Thursday. Think of it as an area. You don't need to be exactly specific with your trades with gold. It's an area. Certainly if you're a put seller, you don't have to be that specific, but this is the key level to watch, basically, is to watch that Thursday low, because it came right down to that very important technical pivot of that uptrend line. So we need to hold that level. I think the more days that gold just hangs around without retesting that level would be bullish. I think if it's going to sell off and retest that level and crack through it, it's got to happen relatively quickly. So that's what I'm going to be watching for, a long entry, and also continuing to sell puts there. All right, if you can, hit the like and subscribe buttons. I do want to mention that last week we finally hit the 100,000 milestone, which is kind of a big deal. The Shadow Trader channel here on YouTube now has 100,000 subscribers. So YouTube, if you're listening, send me that plaque. I'll be looking forward to put that up in my office. But of course, I have to thank you, the viewers, for this, because you guys are the ones who subscribe. You guys are the ones who have been loyal to this channel for so long. So many of you have been watching this program every single week for 10 years, 12 years, 15 years. I mean, I've been doing it for so long. So I do thank you so much for your support all this time. All right, I'll see you next week. Be safe out there. I wish you good trading and good night.